Hello everyone, in this video we will look at Square, the outlook of the company, and if you should buy its stock. Before today's video begins, if you like my content, please like, comment, and subscribe to my channel. Square is a fintech company that offers users the ability to transfer money between wallets. Essentially, it is an alternative to PayPal. The stock has been in a bullish trend since 2017. But in 2020, following an initial price crash in March, the stock price took off, from a low of $30 to a high of $242. The reason why it has been increasing in price since 2017 is due to its Cash App for cash transfer between users. This application has generated billions of revenue per quarter for Square. This app has generated 70% of Square's income in the Q3 of 2020, compared to 25% of its revenue just 1 year ago. The success of this app is the main reason why investors have been buying Square shares. The stock then started to rise even more quickly in 2020, as people are increasingly using virtual transfers instead of cash. This trend may be permanent and accelerating with consumers, and Square is well positioned to profit from this shift in consumer habit. Some investors are wondering if it is too late to buy the stock, since the price has gone up so much in so little time. It should be noted, however, that there have been some price corrections from March to December 2020. Each time the correction corresponded to around $20 from the peak at the time, before resuming the upward trend. In fact, the current price level corresponds to the low point after a price correction, from $242 to $221. My recommendation is to buy the stock at the current level. It is true that the share price is high, and that it has risen so much since early 2020. However, this is not a typical stock but a growth stock. Investors and traders should be willing to assume a high level of risk in order to participate in buying and selling it. The price action reminds me of Tesla, when its share price just kept going to ever higher levels without any major price correction. For those who were waiting for a price correction, they simply missed the opportunity to participate, since the price never fell to where they were expecting it to fall. I believe that the company will be growing in the future, and that its stock will still go higher in the long term. However, in the short term it may go through some more important price corrections, and this is why it is very important to structure the trade to tolerate a certain level of price risk. My recommendation is to buy half of your position at the current price, and reserve the same amount of capital for the scenario where the price falls below $200, between $180 and $195. From the daily chart, we can see that the current price correction was less important than the ones in August and October, and that the price may go through more pullback before going higher. If the price falls to the region between 180 and 200, then that would be a good occasion to increase the holding in Square shares. Even if it does not reach this region and simply goes back up, the position should still be large enough to generate good profit. Because Square is an established company with an established and growing customer base, my suggestion for the exposure is between 5 and 10% of the portfolio. Thanks for watching. If you like my content, please like, comment, and subscribe to my channel.